Welcome to Business Success Tips, where we learn to make more money in less time and have fun, have a lot more fun. My name's Paul Sanneman, and I'm your host. I'm the founder of Contractor Staffing Source, where we help contractors build great teams. My guest today is Andrew Poulsen, and he is a very important person at CoFi, right? So that makes him a VIP. So Andrew, tell me, what you do at CoFi, what CoFi is, and how our listeners might be able to use it.
Yeah, thanks, Paul. So like Paul mentioned, I'm Andrew Poulsen here. I head up all the originations at CoFi. And so what CoFi is construction financing, right? Construction lending, where we really do specialize, and all our fund does is construction loans for builders, developers, investors, anybody that's really willing to add value to a property, then we've got a loan solution for them, right? So whether that's going to be a fix and flip, a development, maybe there's going to be a spec home, a model home, anything to kind of help the shortage of single family across the country. That's what our fund is most excited about. So in the origination side of the house, I've got originators all across the country. We operate in 42 different states. So pretty much where the sun shines, right? Coast to coast and along the bottom, and then intermittently in there in the middle of the US. But yeah, what we do is construction loans, and we do them very, very well.
So give me your a couple of your ideal clients. What kind of person are you looking for?
We're looking for anybody, whether that is even a new borrower, right? Believe it or not, even in lending, I think that's some of the challenges that all contractors face is this level of experience. And because we know and understand construction, we'll get into this a little bit more later from either our founder's perspective or even our technology piece, but we're looking for builders, right, that can build a single family home. And that can be small, more affordable. It can be condominiumized. It can be townhomes. I mean, we can talk about detached. We can talk about single family all day long, just as long as a builder, an investor, a developer has some wherewithal, right, to get into some land, right, give us the hard costs, give us the soft costs, and then hopefully we'll find that ARV. And if there's significant value there after the project's built, then let's get going and get some projects funded.
Now, I assume there's sort of two ends of the spectrum. There's the bank, right?
Right.
They're cheap and slow. And then there's the private, I'm going to call it private lender or hard money, as it's referred to,
Sure.
which is expensive and fast.
Sure.
Are you like in the middle somewhere?
That's where I like to position ourselves. So certainly you got hard money that can close in a couple of days. Sometimes they're no docs, right? But also at that same time, they're taking additional risk without understanding at times, right? So they are going to charge a little bit more. Then, as you mentioned, you got the bank, which is slow, behemoth, right? They have all their policies and everything in between. That is hard for most small to medium-sized builders to jump through, right? Now, if you do get in, the bank is happy to give you some cheaper rates. But where CoFi fits is somewhere right there between that hard money and in that kind of online private money world. That's where we are. So a lot of the competition you can find online, you're Googling, right, construction lending for a builder. We're right there. We're in the top 3 or 4 as far as the placement goes on the Google response. And therefore, right, we're right there competing with everybody else there online.
Okay. So just give an example. Let's say I'm picking a number, $1 million to buy anything in California buys a mansion in Arkansas. Depends on where you are, right?
Sure.
So, let's say to make the numbers easy, it's $1 million house. All right. Okay. Now, how much would it cost from a hard lender, points and percentage, versus a bank, points and percentage, versus you, points and percentage?
Sure. And it just varies a lot between how these institutions or hard money lenders are kind of set up. But certainly, right, at a bank, you're going to be originating around 1 on like a spec or a model home, right? And depending on how much experience or relationship or how much you're actually banking with that bank, they have a lot of flexibility on that origination perspective. Then we start talking about that interest rate, they're going to be hovering right now in the market. You see anywhere from 8 to 10 at a bank. And that, again, depends on the size, the commercial appetite, where they're at in their risk profiling, portfolioing. That's where you're standing at banking today on a normal spec home. Now you get to that hard money, you're going to be anywhere in the neighborhood of really 3 to 4 points. Sometimes they have that up front. Sometimes they push that to the end and really represent that coming out of the profit and the margin there, which is fine. And there's variabilities to that. And then their interest rate is going to be anywhere from really 14 all the way up to like 25, right, percent. which is very expensive. And if the
It's like
ROIs are
putting it on
there,
your credit card, right? For lack of a better
yeah,
term.
your borderline credit card right there on that interest rate. And where CoFi sits then is right there in between. So when you're talking about this kind of online nationwide private money lender, right, most of us are originating right around 2 points, right? Variability around location, experience, where we're at on kind of that risk basis and tolerance. And then the interest rates anywhere from 10 to really that 12 and a half mark. And so that's where we find ourselves. So we do sit there very closely to a bank. We can move then there much faster. And at that same token, when we're talking about not only the speed of which money can be deployed, but we're also talking about leverage. And that's one of the major differences between a bank and their risk appetite or willingness versus that of what you're finding here at CoFi. So,
But what's your loan to value compared to a hard money guy or a bank?
exactly. So when we're talking about a total project cost and a total project value, CoFi is going up to 85% of that cost. So that helps you get into the lot, right? We can help acquire. That gives you then the hard costs, gives us the soft costs, blend that all together, right? If there's a management fee or a developer fee or something of that notion in there too, give me all the costs. We will cover and fund up to 85%.
So if you're into $1 million, you only have to come up with 150,000 to make it work, give or
Just
take.
about, give or take.
Now,
Right?
hard money, you're in like 50% loan to value. It's horrible, right?
So hard money, it depends. More banking, their loan to value is going to be 55 to 65, right? Hard money might go a little bit higher because they are charging a bit more money for it. So they might go up into the 90 to the 95th percentile. And there are different type of loan products out there, even like on a fix and flip where we'll cover 100% of costs, right? But that's also assuming that you bought the land or bought the property outright. So the way that everybody kind of phrases their leverage or their tolerances, it varies. However, here at CoFi, we go up to 85 a total project. And then on the loan to value, which is what we've seen, especially in the recent couple of years, comparables and comps in the market have somewhat slowed, right? And therefore, we don't have appraisers that are, I don't know, doing their best due diligence or just because of the lack of comps in the area, values are coming in low. Okay.
Right.
So where CoFi is to help satisfy that to both, again, keep the leverage and the cash in a contractor's pocket, right? We'll go high leverage and go up to 75% of that total loan to value. Where again, banks might be 55 to 65. Some other, online private money might be 70, 75. But otherwise we're right there competing with the best on the leverage piece.
Okay. So, how long, and then let's talk about time then. So if you come across a deal,
Yeah.
if you have one private money, you may get your knees broken if you don't pay it back, but you probably get it in a day, right? I mean, it's
sure. Yeah.
boom, right?
Yeah.
Guido down the street, I'll pay you like whatever it is, give me $100,000, but I'm going to take your firstborn if you don't pay it back in 3 weeks. So whatever, right?
Right.
And then you've got the bank that it may take 3 months. It's horrible, right? It's especially when they're looking at, similar properties and at their value, and the appraiser comes out, and maybe the appraiser may take a while to get there, and there's no comps and blah, blah, blah. And so it's an arduous, long, difficult process. It could be a couple months anyway, right?
For sure.
So I assume you're somewhere in the middle, right?
Yeah. So here, being more asset-based and focused, right? Because if we've got a builder, right, that has that experience or even gained that experience under somebody else's GC license and now they're ready to go out on their first time, right? They do know how to build, right? And so we have a quick competency check when we're talking to our builders and our investors, our borrowers, right? So if they've got the ability to build and we can tell within the budget, right? We can tell then with that ARV what the outcome's going to be or be close to it, then yeah, we can turn from, right, very first phone call. Now, again, some of this is dependent upon the motivation and where the borrower is going to be. But if he's ready, we're ready. Yeah, we're a 2-week period to really get the deal in, underwrite the deal, get to the closing and the funding table, fastest 2 weeks. I think right now our average is about 3 weeks. But again, there's that little bit of wiggle room in timelines for either an appraisal potentially, but also our borrowers making sure we get the right budget in time and on time.
Right. And so now how do you determine whether a budget makes any sense or not?
Great question. So certainly here at CoFi, and this kind of goes into some of the heritage and the back offering of what CoFi comes from as a fintech online lender, right? We started in the construction space by a builder and a developer that met on a project. So here's a developer and an investor that hires who's also one of the co-founders here, in Cam Harris and Mike Lacey, to build him a home in Park City, Utah, right? So while on that job site, the two of them are working with an institution to get the draws paid and really get the windows working, right? Or get them on site. So they're having a hard time getting the check written and distributed by the institution. So them two, while on site working with each other, figured out, hey, let's disrupt this problem with going to the bank, showing them everything, waiting for an inspector to come on site, and cutting me a check in net 30, net 45 from when I needed the money, and let's work on that. Okay. So they built a software platform for banks, credit unions, private money lenders, even ourselves, right, to manage the construction portfolio, everything from inspections to line item transfers to change orders to really balancing the budget. So we built a software platform that banks and institutions actually use nationwide. Well, at that same token, that we're watching our institutions use the data, inform, right, whether that's the credit committee or even just for draw processing, we've seen tens of billions of dollars processed through our platform, right, at the diligence of the bank. Well, CoFi says, hey, look, there's still a better way. Unfortunately, our institutional partners are not using the software to the best of its abilities, right? Because even within some of those abilities, a digital inspection is an option, right? FDIC, OCC, SEC, everybody's okay with it. So CoFi, each one of our own debt funds loans comes with a digital camera, right? Allowing the builder or the investor to show me the job site, right, in a much faster timeline than what a traditional inspector might come out there and see or even miss during their inspection process, right? So we can speed it up there. We then can distribute funds much faster, digital payments, collecting digital lien waivers. We're not waiting necessarily for a sub to come on site, sign a check, sign a lien waiver, now hand them the check for a deposit, right? And that all bodes well to CoFi's, again, fintech lending experience. Now, going back to how do we validate the budget? Lots and lots and lots of transactions have taken place here at CoFi. We also back into additional data sets that allow us to understand kind of the tolerances or the current price points on lumber, on what's going on in concrete in the local area, on really deciphering that budget. Goes a long ways and helps us expedite processing and expedite
So
approvals.
I'm assuming you fund on percentage of completion. Is that accurate?
Yes, totally.
So one of the issues is sometimes it's difficult for the builder because he has to pay his subs before he gets the money, right?
Yeah, yeah.
And you
So,
can help with that, right?
well, yeah, and that's what we're talking about. Even that digital inspection camera, right? You got your laborers, you got your roofers, you got your framers, painters, sheetrockers. They come on site, right? They do their task and their process. Well, then with that digital camera inspection, you can show me, right? That uploads and syncs right to the loan record, which then tells my asset management team, hey, something's been done, right? The ability then for the subcontractor to either upload or take a picture of their invoice. Now, in tandem with that digital inspection, I can see, and dependent upon how the investor or the GC want to operate, I can disperse and pay direct to that subcontractor's, bank account. We can reimburse or pay down to the GC, but how they want to operate within there is up to them. But certainly we have all the capability to make sure all tier one, all laborers and trades are getting paid as often as they're there on site, almost making the loan as good as cash.
So what you're saying, the more conventional technique, unless you're going to, fund the whole thing up front, which is expensive, is that rather than, oh, the bank inspector has to come out, he'll come out next Tuesday. And then he comes out and he looks at the job and says, well, it looks pretty good, but you got to finish this one part of the roof before I can really fund it, because that's what it says in the contract. So he lets you know 3-4 days later that you did it all, but there's this one part of the roof that doesn't look like it's done. Then you got to call a roofer, and the roofer has to come back out. He has to finish his part. He's pissed because he hasn't got paid yet. And he's getting upset with the guy, and he comes out and finishes the roof. And then the inspector comes out back again and says, oh, I guess the roof's okay. I'll get back to the bank. Then he gets back to the bank. The bank decides, oh, it looks good. We can, give you your money another week. And it sucks, right? It just takes forever.
Oh, yeah. Yeah, the average payment terms on either residential and commercial projects are net 45 and 65 days. I mean, that's after the labor and the trade's already done, right? So this cash flow problem not only impacts a GC and a general contractor, but it interrupts the entire environment of construction, period, right? And these are all guys and gals, and myself included, that need to make our bills. We can't just always wait until the back end and the project's sold before we make our money. There are different ways that we have to make sure that we're paying our environment and providing that flexible payment. Again, as good as cash. That's what CoFi does, back to those laborers and those trades, which also, right, shortens timelines of construction. If you can talk to your roofer or your framer, right, they will come back when they know they're going to get paid. They're going to prioritize your project because they know they're going to get paid instead of operating on net 45 or 60-day terms.
Right. Okay, that makes a lot of sense. Well, I can see how this could get done a lot faster because cash flow is a big issue, especially if you're doing spec houses and building, right? Because
yes,
cash flow will kill you. You can only pay what you can only do what you can afford to finance, if you know what I mean.
Oh, sure. Right? And floating on credit cards and floating out of your own paycheck, that's all scary, right? And so use the loan what it's intended to do, and hopefully it reaches the job site as quickly as possible.
Because I've heard a lot of contractors tell their subs, hey, I'm not a bank, right? I've heard that more than once.
Yeah, no doubt. No doubt.
Okay, this makes a lot of sense. So let's say somebody's interested in your services, Andrew. How do they get in touch with you?
Yeah, for sure. So CoFiLending.com. We're out there. We're online. You can Google CoFi, which is COFI as well. We attend trade shows nationally. So whether that's the International Builder Show or a local kind of Build Expo or otherwise, we're in most of our markets with our people, but certainly online is the quickest. Online, you'll always see a Get Funded button. Click there. Tell me and my team a little bit about your project, right? We're looking for some of the bases of location, what is kind of the acquisition cost, tell me about the budget. And then if you can tell me what you think you're going to sell the project for, then yeah, we can turn around pricing within a business day period. And from there, start negotiating, figuring out what makes the most sense to get the project done.
So as soon as I identify a project, I haven't got the money, but I've got to, if I buy this house and flip it, it's going to be amazing. Or if I buy this lot, it's in a great place. Or the minute I identify, oh my God, this is amazing. It's an infill project. They just passed the ordinance that lets me to do it. It's been on, the ordinance took 3 years to get passed. Pick one, right?
Sure.
So you discover an opportunity, but you don't have the money to do the opportunity, right? Then that's when they should call you, right?
For sure. And like you said, opportunities present themselves all the time. You may not be ready for it, of course. So the sooner the better, whether you are out there hunting or you come across that deal and you're ready to take action and put a deposit or an escrow down, then yeah, that's when you want to start talking, right? So and with our ability to close quickly, a 30-day, due diligence period is plenty of time.
So actually I could put, 10 grand down and get 30 days to do my due diligence, and I could have the loan covered before my 30 days was over, right?
Perfect. Yep. Happens all the time.
Okay. So you can actually get it done in the due diligence time, which is no risk for the people that are taking a shot at the project, right?
Totally. That's exactly right. So you can go to that seller with confidence.
You can also help do the due diligence because you know the market. And if you won't fund it, it's probably not a good idea anyway. So you'd be part of the due diligence process, right?
And I think that's one of the things that sets, CoFi apart is that consultation that comes along with loan origination. We're not here to get people into a bad situation, right? If the ROI is not there, if it doesn't make sense, you're going to hear that from me and my team, up front. Our goal, yeah, we want to originate as much as we can, deploy as much money as possible. Sure, we're a lender, of course.
Right.
But we want to make sure that our builders are set up for success. And where we do see some underlying risks potentially, we call those out and call them out often.
So you're sort of like a good investment partner. They can say, this is a good deal, this isn't a good deal. And they can use your expertise to determine whether this makes sense or not, right?
Yeah, we're a banker in a pocket, which isn't necessarily, easy for us to be, but that's something that definitely benefits the industry and benefits our building partnerships, no doubt. And
sounds
for sure.
great. Well, anybody in this audience, the next time you come across a deal, we do it all the time, right? You say, is this a good deal or not a good deal? If you can get a refundable deposit, go for it, put it down, and you can call CoFi and they'll tell you if it's a good deal or not, and you have the money if you decide to do it, right?
Let's go.
Sounds good. Okay, thanks, Andrew. I really appreciate being here. And this is a great opportunity. I think the real estate market may have a lot of opportunities soon. Let's put it that way.
It's an interesting time, but certainly it's a time to gamble a little bit, make some money. I think the same
Because
thing.
I know a lot of people are building up their war chest going, wow, this next 2 years is gonna be awesome.
We're bullish on single family. There's a pent-up demand. It's gonna happen. It's just a matter of when.
Cool. Okay. Thanks, Andrew. I really appreciate you being here.
Thanks, Paul.